Okay, all right. This video, I'm going to briefly go over with you how you should properly back test. Okay, understand that back testing, it brings a lot of benefits. The one benefit is going to be it builds a lot of confidence in your strategy, in your setup, just seeing it play out in the markets over and over and over again. It allows you to pull specific information about your setups that you like to take, setup or setups or your strategy. It allows you to find, identify, and just pull specific information about that setup. That way you can further refine the way you trade, refine your strategy, right? You can find out those exact, specific triggers that play a major role or key role in your strategy. Builds confidence, um, does that part that I just said, and also pattern recognition. Okay, it's going to build on your pattern recognition, your ability to go into the markets and see things as the market presents them to you in real time. You should not be getting on here back testing and, oh, this trade played out and hit my target, so I'm going to say that I would have took this trade. No, because in real time, depending on how the price action actually plays out, is going to be a heavily determining factor as to whether you really would have entered some of these trades or not. Some of these trades may even look like you would have took them and you would have won, but in reality, based on your rules or criteria, you could have lost. Okay, so be very specific and detailed. Don't just base it off how the trade actually played out. You need to go candle for candle. This will also strengthen and build your price action reading ability. Okay, now you need to be able to document these specific things about your strategy. It took me a long time to get to this point where I could do this myself, but I'm just going to briefly run through the different things I log and track when I backtest my trade. So, of course, the date of the trade, the day of the week, the buy or sell. Now, execution window for me, these are the main trigger times when I usually take a trade. Okay. So I got these in here and I'm able to document that. What type of entry was it? Displacement, engulfing, wick rejection, sinking order block? Was it more than one? Model setup type. So I got modules and different types of setups I take. Okay. Different ways I like to classify certain trades. Result, was it a win, loss, break even? Setup grade, A plus, target hit in full, partial target hit. Setup trigger, was it Asian sweep, equal high, low sweep, inducement taken? Session that set liquidity, right? Want to put those things in there. So these are all just different pieces of information that I collect about my specific setup, which actually helps me get to a point where I can identify what are my A plus setups. Okay. That way in real time, when I'm on the charts and the markets are open and I'm trading, I can actually see these things taking place in real time. And I can already know, okay, based on these 3 to 4 things or whatever, this may be an A plus setup type of day. So, that's just the main benefit to back testing. And real quick, I'm just gonna mark up like 2 or 3 trades just so you can see what I'm talking about. So right here, 9:45 is one of the times where I usually look to enter a trade. Automatically, when I come into the trading day, I'm looking to see where London and Asian were positioned prior to New York session. So I got London high is open here once the day opens up, and I also have Asian low open here, and also when the day opens up, London low will be open here too. So my obvious target of the day would either be Asian low and London low, and possibly even London high, depending on how the market plays out. As you see, 8 o'clock, they open up, they immediately start going down. I definitely would not have been in the sale anywhere in here because liquidity was not taken. It was nothing for me to do here. I take that back. Yesterday high was taken out as liquidity by London, but just New York didn't give me anything to go off of to enter the sale. Okay, so they sold down, took out London low, delete that, and they took out Asian low. Okay, great. Now, once those two have been taken out, what do we have? We have inducement here because this area is a valid pullback before the market continued up and closed above yesterday's high. So we got inducement here. We got a little demand zone here, right? Market pulled down 9:30, 9:45, tapped into the demand zone, took out the inducement, swept the 9:30 candle. I would have took this trade. Okay, this is definitely one of the setups I take. And the obvious target on the opposite side would have been London high. Okay, so I would document this entire situation. Entry candle, what liquidity was taken, what liquidity was targeted, just every little specific thing I can about this setup. And this is how I would, document this trade. Okay. Next day here, I would not have taken this trade. We did not take out any liquidity prior to 9:30. So you got 9:30 here. It kind of tapped into the supply that London left. London did take out Asian, cool, but we're so close to London high. I would be more comfortable taking this trade had they took out London high. So 9:30 mitigates this little small supply because this candle here swept the previous candle. So it's a single candle order block. It swept into that small supply, okay, mitigate that supply basically. And then 945 came out, swept the previous candle, closed bullish, momentum shifted, and it just dumped down. Not something I would have took, so whatever. But this day, had I attempted it, could have, it just depends. Some of these trades you need to also too, you back test, be honest with yourself. Don't just say, oh, I wouldn't have took it. No, go candle for candle to make sure. Because in real time, I can honestly say I wouldn't have took this. Only reason I would not have taken this trade, there is no inducement in this leg. London took out Asian, but that's not something I want. I want to see New York typically take out the liquidity to kick off the session, or at least I want to see obvious liquidity taken out. These little sweeps from London, sweeping Asian, that's not valid enough for me. Sorry about that. It's not valid enough for me. So I wouldn't have taken this trade. But if you do see a trade that you would have taken and that trade would have resulted in a loss or stop profit or BE just based on the price action, make sure you document that as well. You don't need to have all wins in your backtest log, okay? Now going into the next day. So we have at 8:30, we're blasting up. Big fair value gap. We've closed above both sessions. We've closed through this fair value gap here, created an inversion. So I can see that they inverted and we held that inversion here. 9:30 pushed up from that inversion, came into, we took out this inducement here. And you see we actually reacted to this inducement at 8:45. This area from yesterday turned into a supply for the next day here. Tapped into this area right here at 9:45, one of my entry times. Once this candle would have tapped into this supply and closed the way it did, I definitely would have been in this trade. Obvious target for me to have been the opposite side liquidity. So New York low, London low. And as you see, they came all the way down before the day was over with, and they cleared London low to the T. It also gets you very, very familiar with seeing things like this and understanding that you don't want to ignore stuff like this. It's not a coincidence that they came all the way down here, swept London at around 3:15, and then they ended the day there. It just further confirms to me that my strategy, the way I trade, take and target, is very valid because I can see them taking out liquidity and reacting to those areas, right? Even if they don't give me a follow through, like they took out this inducement here, which is another form of liquidity, and they did not just sell off from there and take out London. They took that inducement, they gave a reaction, went back to this fair value gap, and they went higher into the supply here, and then they dropped. You want to get familiar with seeing things like this because it just builds on your pattern recognition and your understanding of what the market is actually doing in real time, so that when it happens in real time, you're not blindsided. You're able to identify every little piece that's actually relevant to you in the way you trade. And yeah, make sure you're documenting that. And then you take all that data from documented trades. I personally recommend you document well over 200 to 300 trades. Download this little platform called FX Replay Session. I like it a lot. I've been using it lately, almost every day for back testing. Lets you, for me, since I trade YM, I'm able to go all the way back to 2010 or 12 or something like that. But you got to get in a lot of examples. You need well over, I say, at least 300 trades. If you can find your strategy, your setup in action over 300 times or more, that is a large enough sample size of trades to get pull real data and information from that you can actually use to, figure out if your strategy, your edge has positive expectancy, figure out your average risk to reward, figure out your average, you could even, the features on here are so great, you can even figure out what your, you can even figure out what your average, win or loss would be, win rate, stuff like that, whatever you care about, right? So yeah, that is how you backtest.